Is this the big dump we've been waiting for? Oh, I gotta move my target. What's the next area of liquidity? There's nothing. Let's see how far it goes.
ESIC. ESIC.
Minus ice. No way. It's just dumping.
ESIC.
Wow. Just a bunch of sell ice. Wow. I wish I had more contracts in the game. I scaled out too soon. Oh, shit. I'm not trying to catch this
Stop
falling knife.
run.
No way. I don't see any liquidity building down here. Yes. It's exciting. Hmm. Hmm.
ESIC.
A lot of bids. Maybe not enough though.
Stop run.
Oh.
ESIC.
Hmm. I wish I could go long and short. Can I? I don't think I can. Mm. It took you so long. From
Yes, stop run.
you can eat, babe. I just had a shake.
NQ stop run.
From
NQ stop run. Yes, I see. Yes, I see.
sure is tasty. Uh,
NQ I see.
wow. Salbergs. Boop. Mm. Wow.
ESICE.
From the level. Yeah, today was a clapper, bro. That's a big move. This is borderline as big as Tuesday now. Yesterday was nothing compared to this because you gapped up and then now you've sold off lower than any other point, and now you're getting back to the Bostic bounce level here.
Oh yeah, yeah.
The 200 days 20 points higher. And then now the 200 day and 100 day are within 1 point of each other. It's literally the same thing. New York governor writes letter to Walgreens, Rite Aid, and CVS. The banks are down 3.25 right now. Okay, it's getting a little choppier on Bookmap, but I'm still worried about the fight. You might get a little bit of a bounce, buy some time, do nothing, kind of like yesterday. Like yesterday, we kind of did this, but this one's just a lot more violent. And then maybe we dance around. That one was right at 39.70. You hit 39.60.98. I think the banks are a big part of today. I think because, I mean, even with the bonds up here, but I think the banks it's too early to freak out on the banks. If anything, just keeping it, simple, just looking at the job
Stop
data
run.
tomorrow. But, dude, I don't know. 50% on SIVB, that's not pretty. But now Morgan Stanley, Citi, all of the banks are leading the way dumping right now.
NQ stop run.
Wow. This is a big one.
39.61 now, even on the futures. Oh, shit, I didn't even realize that. Yeah. So now you're below 39.60. This is going to be 39.60 on the futes. All of the volatility indexes are at the high, 39.60. Oh, this don't look pretty, man. SIVB is just it's a different animal. Again, it's not even related to everything we're talking about with like crypto. It has nothing to do with crypto. That's the terrifying part. Sam Bankman only makes that problem worse. And then what was the low? 39.60.98. I think you go. Let's 5 more points here. I think you either get a bounce here, or 5 more points lower. But I think Apple's tweak. I think the banks are tweaking out now. Tech has given up its gains. Tech has gone negative. Only thing up is utilities and staples. And then low ticker once again. I'm gonna just keep up XLF. might be the catalyst if the banks become a problem. But I just be careful. I don't want to talk about it too much because I'm like, this could be here today, gone tomorrow. Everyone just reacting to it, but it's definitely thought-inducing. Definitely captures your attention. Schwab drops 11%, worst decline since April 18th. So that's another bank. Bank of Canada. Rogers is speaking, still worried about upside risks. And then bonds still keep going up.
Wow.
Let's see. I mean, nothing really happened. You had good jobs data, but SIVB, I would say, was the only, like, real event, more or less, that if you wanted to see if something happened. I'm looking at SIVB's balance sheet now. I haven't seen the update, though. I'm trying to see what they do have on there. Same thing as September. I guess September, October, you had the gilts breaking. So now we have our interesting one. Because now this is not UK, and this isn't because of policy. This is just all of a sudden one bad problem with a bank. And now the last thing you want is just everybody to start asking the question of, so what's your bonds worth now? That's kind of the only problem here. Top tick Thursday, baby. Okay, so that's the bounce from that first level. It looked nice for now. That's what, 5-6 points on the ES? So there you go if everything catches up. That was a dirty drop, though, man. Even then, this is looking like a little wishbone. SIVB printing the low ticker, man. Down to 120. Bro, this thing is down to 52% right now. That is actually insane. Something similar. No. Just now, the banks today is your first. This is the first time in a long time you have saw a bank with risk. Is the best way to put it. That's the only way I could explain this. That's all it is. It's just nobody was worried about U.S. banks. Nobody was worried about anybody unless your name was Credit Suisse or you had crypto. Now, today, you just had this this reaction here to SIVB and what they kind of announced. It's highlighting now another segment of a problem that nobody's really looked into. And quite frankly, it's so early. You know, this could be like, you know, it's like a kid scrapes his knees and you're like, oh my gosh, we got to go to the hospital. It's like we don't know yet if this is serious or not, but at the very least, a new risk, a seed has been planted today is the best I could put it, but I wouldn't call it Lehman Brothers, at least not yet. But I think it's way too premature to say that that's what's up with it. There's a rusty nail in the knee of the banks, yes. That's why. So we don't know how serious. Maybe you got to cut the leg off, but I love it. You got to, here's the best way to describe it is the fact that we're talking about risks with the bank, and most people are thinking it's because of crypto or Silvergate. And that, my friends, should tell you there's a problem. Like, do you see what I'm saying? That right there explains all of it. Crypto, That's an easy one. You know what I'm saying? Like that's an easy one to figure out. You're like, okay, crypto. Oh, we don't know this. Oh yeah, but no. You mean to tell me there's a bank down 54% right now, and they just sold $20 billion of assets, and now it has nothing to do with crypto? That's weird. That is definitely not on the bingo card for this year at all, or even last year. Federal Trade Commission votes to block Black Knight ICE deal. SIVB halted. So you might be able to bounce then if that chills out the other financials. That's
Yes,
crazy.
I
They
see.
finally halted it. They didn't get clapped on 0 days. They got clapped on bonds, it looks
Yes,
like,
I see.
which is wild. So that's why I'm saying this isn't like, do you understand what I just said? Like you're like, did they get clapped on crypto? Did they get clapped on 0 days? They got clapped on an old bond trade from a year ago. That's weird. Not weird. It just means
Yes,
they just
stop
made a bad
run.
decision.
Oof.
But it's definitely different than everything else. But that's just kind of telling you that
Yes, I see.
now that's another worry you're going to have here. Yeah, so here it is. I could give you some more updates on it.
But
Here's a recent event
excuse me.
reaction. SVB's decision to sell $21 billion in available for sale securities, resulting in a $1.8 billion tax loss, comes as a surprise considering the bank's ability to source off balance sheet funds for deposit. To ease the capital hit, SVP will issue $1.25 billion in
Yes, stop
Wow.
run.
and a $500 million mandatory convertible preferred share offering. General Atlantic will also buy $500 million in common shares in a separate deal. So the latest update too from their
Wow.
thing, security losses. So this was before today. They were saying SVB is sitting on a $15 billion unrealized loan loss provision. Whoa. Yeah, you just buttered that. You dropped big now. No news. The latest was Bank of Canada, but now
It's just a
39.55.
big
That is
player.
a big
Keeps
flood.
dumping.
39.40. If you really think this is going to continue now, the next test is the 200-day and the 100-day. That's this final line over here, and now you have given up most, if not 90%, of all of the Bostic bounce now. That one was a big one.
That's what the Fed wants.
Yes, stop run.
Wow.
Yes, stop run.
Look up Credit Suisse.
Yes, I
Chairman.
see.
They've been getting, I mean, again, you could even argue the bank problems could have started there. 39.55, 39.53. Futures aren't even dropping that much, surprisingly, but SPY, that is a new low on that candle. Oh, man, lots of sells. Damn, the Russell is down 1.9. SPY's down 1. Or NASDAQ's 1.1 right now. SPY going a little lower again. 39.55 is going to be big for the futures. You're already in the low on the S&P. Oh, is there no bids below this now, too? There they go. They're trying to get back up there.
Yes, stop run.
39.52. So another new low. That's it. You're 12 points
And
away
Q
from the
stop
next
run.
level. Another new low. 39.52, 36, 25.
Yes, I see.
39.51. Dude, there's, again, no headlines on this. This has been all day. You've just been straight up just dumping. And then the bonds are catching a bid. $39.50, $275. All right, I bought 3 MESs for a flip to the upside at $39.50, $275. I'm going to try to flip that. There, we'll see if it could go up to 39.60. Get out there. Jeez. Is this seat? I think it's something related to banks and bonds. That's the only thing I could explain on that. Okay, that was a good entry there, but may not last too long. And then Apple flush. SIVB's unhalted now. I don't know. It's just I think it's all banks today. That SIVB shit is weird. So again, this was before they had 15 billion in unrealized loss position and 91 billion held to maturity portfolio. Their ability to shift to deposits balance sheet alleviates concerns that liquidity crunch would force the bank to realize losses. Meanwhile, slowing cash burn and startups opening to lower valuations can help stem the deposit outflow seen in recent quarters. And then let me see, so yeah, they had over 15 billion of losses. Then they sold 21 billion today and took a 1.8 billion dollar loss today. And that's just all on bonds. SIVB, I wouldn't call it systemic risk, but it just looks like, I mean, not everybody was protected from making a really bad decision. In a weird way, it's like a Billy Huang trade, but it's public. And that's the company. That's it. I mean, it's not like it's a secret. Like, that's the whole point is like I'm reading old analyst comments and they've been talking about their, 15, 19 billion dollars in losses, saying, oh, they could get around it. Oh, it's this, and they're going to find a way to do it. But today they kind of just faced a setback with it. So bad. I think because that's it. It's just bad. It's just
I'm
a bad
hungry.
decision.
Fucking eat it.
Very low, and then Powell just raised the rates like a madman. Maybe more banks have the same bonds. It depends when they bought them or how they managed it. SIVB, I don't know. I mean, eventually, in a weird way, people did buy $1 billion worth at higher valuation. SIVB is hitting another low after the unhalt, but I have no idea. I think SIVB is just up in the air. I don't even know their current market cap right now. They're at $7 billion, so Roblox is worth more than SIVB. So hard to say, Habibi. Hard to say. The bill position, you don't have to close it at the end of the month. You can hold it. It'll just reset back to that low, and then you'll get paid the monthly dividend. The fact it's happening now is alarming. We won't feel the real effects of rate hikes till later this year. I don't think it's I could agree with you on that, but I think the problem is now, I think this is what happens when we start talking about 6% rates. I think we found the level. Maybe this is where the bond market can't handle anything. Like, right, I think the market for the last year or so, it's done good under 4% or so. But it seems like, just like the UK, remember the UK gilts, their limit was 4%. So maybe when we get short-term interest rates at 6% and this forecast of a much higher one, maybe that's where we start to run with bank tension. But I don't know. I think again, everything we're talking about right now is assuming. That's all it is. I think you make the same amount by holding it or flipping it. So you're either going to get 25 cents a share for the dividend, or you should be making 25 cents a share on the equity. They didn't hold the bonds for so long. I mean, these are bonds that they want to hold till maturity, but you got to realize they bought all of these bonds in 2021. So they made all of this money from 2019 to 2021, and then somebody at the bank was like, yo, let's go buy billions of dollars of 10-year bonds at 1.6% right now. And then we can make 1.6% for the next 10 years. And then everybody at the bank was like, yeah, that's a good idea. So then they bought, like, what, $90 billion or a little less? I think like $60 billion or something of bonds in 2021, at the end of 2021, at 1.6. And now those same bonds are going for 3%, almost 4%. So do you see that? So now, between even up until today, they had over $19 billion of unrealized losses. So they were like, it's okay.
It's all right.
You know, we don't have to, we only lose if we sell. But now as things are slowing down and other things, they're like, okay, we kind of need money. We're now not even getting deposits from private equity, yibbity bobbity boo. So then they took a loss and they decided to sell them. So by buying your bonds at 1.6, and then 1 year later those same bonds are going for 4%, you're missing out. That's like a 70% loss, 60% loss, because that same bond is trading at a fat discount, offering a way higher yield. So they bought those bonds when they were much more expensive. Why sell the bonds if you didn't leverage? It should be a safe asset. You shouldn't lose. Well, if something slows down. So it's like I'm saying, it's like going and buying an NFT and being like, it's okay. Like, it's like having a good job. Like, let's say you have a good job. Let's say you made a bunch of money in the market 2020 till 2022, right? And then you're like, I'm going to go buy this NFT ape for X amount, and I'm going to hold it for 10 years. You're like, it's a good idea. And then the prices start going down. You're like, oh, I don't need it. It's fine. I'm going to hold it forever, right? And then you lose your job. And now you lose your job. And then now you have to pay for other things. And now this asset that you thought you were going to hold for 10 years,
you got to sell it.
Other circumstances put you in a more difficult position.
Exactly.
Now you're like, okay, well, we're not getting our deposits. What are we going to do? So now they're like, okay, we could take some of the tax loss on it, but then let's get some money out. They didn't sell all of them. They only sold 20 billion only, but that still resulted in a 1.8 billion net loss right at the paper, right when you took that. So that's pretty much it. So it's like they didn't need to sell it, but it seems like everything else is slowing down for them, and other issues are compounding, and now their biggest source of, money on their balance sheet, or one of their biggest, they need that money.
Yeah.
Yeah, I agree with that. That's the second part of it. I'm not focused as much on that. That is true. That it's not only not only did they buy the bonds at an awful time, they also invested into a lot of private equity. You see what I'm saying? They bought a lot of private equity that was just dog shit, and they bought it all at the highs. Like, they were on the Kathy Woods hype. So it's pretty wild. But I'm more worried about the bond issue, because that highlights now, if anybody runs into a job loss, aka, you know what I'm saying? If anybody has a problem and then they have a big bond portfolio and the broader problem forces them to take those losses on the bonds, then somebody's fucked. Let's see. And SIVB is halted again. I'm trying to see where the investor level is. Oh, yeah, you got to add. That's good. I'm looking for something. It'll be great.
Yes, stop run.
Okay. Wow.
I got you. Yeah, send it to me. I can find it. Just it doesn't come up on first search.
NQ stop run.
Whoa.
And then another low. My negative on my MES now. Yeah, back to break even. This is where I bought in. That was a good bottom tick
Wow.
on there.
$52 got bought. Again. Boom. Boom. Had to grab some brekkie.
NVIDIA tanking, of course. SIVB unhalted again. Now it's coming down. Bro, that's crazy. 58%. The CEO has already lost 60% of his pay. Just on that.
ES stop run.
Boom.
There it is.
Wow.
All right. So here's the investment letter. They say today we took strategic
The craziest
actions
short
to
I've
strengthen
ever
our
been lucky
position,
enough to be a part of.
increase sensitivity to take advantage of potential for higher for shorter rates, lock in funding costs. We've sold substantially
So beautiful.
all of our
Wish I
available
had
for sale assets with the intention
size
of
going into
reinvesting
that.
the proceeds and commenced an underwritten public offering to take strategic actions which are intended to further booster that position. SIVB dying. SPY is dying now too once again. We're taking these actions because we expect continued higher rates, pressured public
NQ
and private
stop
markets,
run.
and elevated cash burn levels from our clients as they invest in their businesses.
Oh, God.
I said, come on. Will enable us to increase asset sensitivity. We plan to increase our term borrowing from 15 to 30 billion and hedge these to mitigate higher
ESIC.
funding costs in the future. You're dumping even more now. This is slightly below the level we were just at, though. I'm surprised.
Yes,
You
I
take a look
see.
at that MES. That was trading very interesting. You're only slightly lower, but we'll watch out here again. 39. I mean, shit, it's 39.40, and then that's it. 8 more points. 8 more points, Habibi. Damn, NVIDIA dropping too. They got me, but we did good on the NQ for now. I'm glad we had that rollover in. He will do his thing here today. That's crazy. That NQ rollover was $4,000 from the top.
Wow.
Actually hideously disgusting. I think maybe those
ESIC.
will move more, but shit. Why are we flushing?
ESIC.
I think it's the bank shit hitting.
ES
and that's
stop
pretty
run.
much it, and then breaking momentum from earlier. I think this is a mix of momentum, getting ready for tomorrow, and now some pretty bad news with a lot of counter movements and other assets there. Another new low right now, 39.46. 6 more points until the 200-day moving average.
Wow.
Ay, ay, ay. I'm trying to read this here.
Dang. Look at all the icebergs. The sell ice is
Ample
nuts.
liquidity and flexibility. They didn't seem too worried. It seems like they're just doing this to try to reposition. Karuta's tomorrow. We actually haven't even had that yet. I think right now the big test is the 200-day. That's all that matters right here. All that is going to matter is that. Confident the future in the long term tailwinds support SVB. I mean, honestly, they don't sound too worried. So I don't know. Based off of just skimming this investment letter, it doesn't seem
Yes,
like
I see.
they didn't warn of anything. I think they just kind of felt like they're ripping the Band-Aid off. And they're like, listen, man, we're going to take these losses, but we're going to reinvest it all. And since we think interest rate is going to be high, we're going to take it and move it over. And then actually in the long term, it'll benefit us. So it's kind of like they're just kind of re-rolling. They're kind of like refinancing, but they just refinanced in an awful way.
But that's below, bro.
So it seems decent, but my goodness. Would I put 100K in Bill if you're waiting to invest? At the beginning of the month, try to get it at a good one. But, I mean, with Bill, unless they cut rates, I mean, your only risk with Bill is if another bank blows up overnight and then they cut rates immediately. But other than that, I wouldn't be opposed to it. I mean, my first trade with it, we stuck in like $10,000, $12,000. I think they're trying to cap. I think they're just trying to hedge a little bit better by taking the losses now, rolling over to new positions, and then make better hedges. It'll buy them time. That's kind of what I got from that letter.
Wow.
And it seems like they didn't mention any worries, so it's not like they were bringing up issues of like contagion. They didn't bring up anything related to crypto. It's not like they said, this is going to threaten our guidance and lower it. They guided down a little bit, but then even said there is some good things that you could do beyond that. On the ES, I'm going off of SPX Cash. SPX Cash, the 200-day and the 100-day is 39.41 and 39.40. But even then, the futures are getting a little light here. And volume, I don't know. Volume on SPY doesn't seem that crazy. And then bonds are up this whole time. I mean, honestly, I think it's them buying it. Now that I think about it. Just like, I bet you they just took their loss and then maybe this is why they're rolling over. I don't know. But this is the first day in a while here, too, where the market is absolutely dumping and then people are going to bonds for protection. That's actually quite wild. This dialogue could be damage control. It could be, but at the same time, I also think, I don't think it's like too. I think the fear is worse than what's happening. I hope that makes sense. Like I keep telling you over and over again. I'm like, yo, we are just hypothesizing right now. We're talking about the scenario, but I think the fear is bigger than what happened. So, $19 billion is still a lot of money. But at the end of the day, it's like.
Yes, I see.
This has had way more of $19 billion of effect on all of
the banks.
Yes,
top run.
I think the fear that other banks could have this problem is a bigger worry than actually what they did. Because if they still have enough money to buy the bonds and roll over, they'll buy themselves some time. But I think the real issue is this. It's a fearful topic to be discussing. We're only down 1%, but we were up about 0.5%. So it's almost like a 1.5%, 2%
Is this bottom?
top to bottom
No, we
move
thought
on
that
the
before.
NASDAQ.
You need to create structure. Could be.
Every bank does have this problem, yes. Because they all own some level of bonds. Some are better than not. Some hedge better than others. And a lot of the banks are connected. The chance of contagion with one bank, that's the problem because the banks all work together. Yep. Especially the bigger you are, the more connected you're going to be. It's a late cycle, but this is going to buy them time. So it's not like they're going to go underwater today. Really, by the end of the year, beginning of next year, you're going to hear about
SIC.
SIVB again if they have to make another issue or if the bond rates fuck them. SVB actions
By
highlight
ice.
Schwab cash sorting risk, says Raymond James.